So today we will discuss role of money. Money plays an important role in any economy. Let's look at the role of money. In your chapter Money and Banking, page number 30, the topic is role of money. It comprises of three topics, and these 3 points, not topics, these 3 points tell us about the role of money. Let's look at point number 1 and what it has to say. Point number 1 says that money makes exchange easier. We've read about it earlier, that how money has solved the problems that we had with the barter system. Hence, it has removed all the difficulties that we had with the barter system. Point number 1 says money makes exchange much easier, and money removes all the problems that we had with the barter system. That's its role number 1. And in role number 2, what do we have? Let's quickly look at that as well. Price system is very important in our economy. All the commodities that we have in the market, every other commodity has a price tag, and price system is so prevalent in our economy, also to say that in all the economies of the world ever since the evolution of paper money. So price system is a very important characteristics of money, and it is very important for market centered or even a market friendly economy. In today's world, we see that the market economy is very popular. It means all the products directly go to the market and then they get sold from there. Hence, the economy that we have is market economy, and in order for it to become a market economy, it has to have a price tag. Hence comes the system which is known as price system. Price system is dependent on the supply of money. It means how much money do we have in the hands of the people. Based on that, it will determine, its entire system will run based on that. A market-centered economy is one where the demand and supply forces determine the output of the price of the commodities and the services. As I said, the supply of money determines what's going to be the supply of the commodities and the services we have in our country. The demand and the supply. See, the demand and the supply of commodities, they determine what is going to be the output, what is going to be the price of certain commodities. If there is a demand of a certain thing that is very high, it will determine, obviously the price of that product will be more. And if there is a demand of a service, say for teaching, say for doctor's service or any other service, then if the demand of that is very much, obviously the demand of money and the demand of supply of that product will increase. Therefore money plays a very important role in that as well, because ever since the evolution of money, price system has played an important characteristics. And because of price system, in the markets that we have, we have market centered economy or semi market centered economies. Here we have many services, many goods that many individual has to offer us, and all these services and all these commodities have a price tag, and we are talking about that. And the rise of the price of these commodities and these services will determine how much money do the people have in their hands. So in that way, money plays a vital role. In point number 3 that you have in page number 30, even in a system where the administrative decision of the government determine the price and output of the commodities and services and not their demand and supply, the value of output in that system is expressed in terms of money. In our government, we see that price tag of all the commodities, all the essential services is determined by the government. It is not determined by the producer or the consumer. It is directly determined by the government. But government does not determine what is going to be the demand of that thing, or what is going to be the supply of that thing. Government does not put any thought in that regard. Government doesn't do anything in that regard. Government only plays its important role in determining what is going to be the price of that. So as government plays an important role in determining the price, here comes the third role of money. Money plays the important role here as it becomes the face value of all the things that we buy. Without money, you cannot imagine any economy, or no economy at all can operate without the help of money. Therefore, money is very important. If I quickly summarize what I tried to give you in this discussion, it would be the first role of money is that money makes exchange easier. It has successfully able to remove all the difficulties that we had with barter system. Then we seen that the price system has played an important role in the market centered or market friendly economy, and because of that the demand and supply of the commodities and the services have increased, and the demand and the supply of commodities entirely depend on how much money the people of that country, it means the citizens, have. And thirdly, we discussed that the administrative system of our country has the control over the price tax, over the price system. It means the government decides what's going to be the price of a commodity and what's going to be the price, not going to be the price of the other commodity, but the government does not give any heed to the demand of that thing or the supply of that thing. From that we learn that money plays an important role, and that without money no economy of the world can run successfully. Okay, now we will look at the drawbacks of money, also known as shortcomings of money or demerits of money or evils of money. It has many names, and you need to have an idea about all these names in your minds. In your book you have 4 topics, 4 drawbacks of money, and 4 of these drawbacks you have to understand thoroughly in order to be able to memorize them and to be able to write them in the examination. Point number 1 says, when money lacks stability of value, it creates a number of problems in the economy. What is lacking stability of value? It means when the value of money continues to fall in an economy. Suppose you have suppose we had 1000 rupee note, and then 1000 rupee note was banned and they introduced 2000 rupee note. It means that the money is becoming bigger every single day, which means the amount of products or the amount of commodities an individual, say 10 years ago, used to get, or a year ago or 2 years ago used to get with 100 rupees, we do not get the same amount of things with that 100 rupee today. Today, in order to get those things which we had with 100 rupees, we need 500 rupees. When that happens, it means the price of the commodities that are available in the market, they rise. And when they rise, it means the price of the value of money has fallen in the market. That is what has happened. So when that happens, your book says, point number 1 says, it creates a tremendous problem with your economy, because the fixed wage earners, people who earn fixed money, say 10,000, say 20,000, when the value of money falls, it means in order to buy a product which you used to get at 20 rupees, now you have to pay 50 rupees in order to get that. So when that happens, when the value of money falls and you are a fixed earner, where will you get that money? It means if your family ran on 5,000 earlier, now you would need 10,000 or say 6,000 or 7,000 to run your family. And if you are a fixed earner, you would have problems with that. So your book says when money lacks stability in both the ways, we would read about the other possibilities that it describes. It says the other way around. When the value of money increases, it means you have to pay less money in order to get more things. There also creates a problem in the economy. You see, when the value of money increases, it does not fall, it increases. Suppose if you have 100 rupee and with 100 rupee you get the products of 500 rupees. If that happens, all of a sudden, if that becomes a topsy-turvy situation right now, what will happen to us? the producers, those who produce a number of things that are available for us in the market, we will not have all these things. The producers will stop producing the things because they will face losses in their production, and because of that, when the producers stop producing things, obviously the people working in their factories will lose their jobs, and because of that, unemployment opportunities will come. It means the first drawback is this, that when money lacks stability of value, if the value of money falls or if the value of money rises, there is a problem. If both the things happen, there is a problem. Then what is the suitable thing? What is the solution? The solution is this, that money has to maintain a balance. It does not have to be too high, it does not have to be too low, so that the consumers, the producers can coexist at the same time. Point number 2 says, money has become an instrument to gain more economic power in our country. How is that? When you have more money, money acts as an instrument to have more economic power. Suppose you earn 10,000, you want to earn 20,000. When you would earn 20,000, obviously as human tendency, you would want to earn 30,000. And when you earn 30,000, likewise, you would want to earn more, and the desire and the want of human mind does not stop. When that happens, money acts as an instrument of having more economic power. This is what is explored in point number 2 under the demerits of money. It says, in an economy where money is everything, money can easily become a means to acquire economic power. You see, in our economy, money is everything. Almost everything that we use, that you have in your house, that we are using on a day-to-day basis, all these things are possible to get through money, because hence money is an important instrument, and money plays a key role in our life. And some people tend to say that money is everything. When money is everything, money can turn into an instrument, and it can become very dangerous, and it can concentrate more on having more economic power. So when somebody has money without moral jurisdiction, without common awareness, they would want to have more economic power, and in having that more economic power, it will make a great imbalance in the society and in the value system that we have, which we would definitely cover in the upcoming drawbacks of money. Point number 3 under the drawbacks of money explores that one of the most significant weaknesses of money is that it can erode the social value system that we have. What is the social value system that we have? Social value system here means justice, equality, and respect, and the rights that you enjoy by living in a sophisticated country. Now, money's weakness is that when somebody has more money, it can become a weakness. It can destroy the social value system that we have. It can destroy the respect that we're supposed to pay to one another. And because of that, because this is a serious weakness of money, we are seeing in today's world that people do not pay respect to the teachers, to the doctors, to all the service providers. Even we do not even know how to talk to the vegetable vendors, to the daily wage earners. We don't even know, and that is happening because we are losing the social value system. And because of that, we see a number of things happening to us, like corruption is number one. That's one of the value system. Corruption has many dimensions, but you have an idea about corruption. So corruption is happening because of social degradation of social value system. Somebody was supposed to get something but he's not getting, that means it's corruption. Black money is a sort of corruption as well. We have irregularities. Somebody was supposed to be paid on time, somebody was supposed to get something, somebody was supposed to get the benefits of something, but they are not getting that. So there are irregularities from the persons who have the posts, from the higher authorities, and we even see such a thing from the government as well. We see injustices of all types that are happening in our country because of the degradation of the social values that we have. in our country. So money acts, one of the prime weaknesses of money is that money degrades the social value system when you have too much of that without basic awareness. It is kind of related to the topic that we read previously, means it's connected to point number 2. Now, drawback number 4. Drawback number 4 says that when money takes the form of black money, the economy suffers in many different ways. What is black money? The tax you are supposed to pay to the government, if you manipulate that tax and you eat that amount of money, you keep that, you engage that amount of money and then do not pay that money to the government, that money directly becomes black money, also known as unaccounted money. Point number 4 under drawbacks says that when money takes the form of black money, it means when people evade their taxes in large number, the economy suffers in different ways. Our economy will definitely suffer, because you need to understand one thing: the money, the taxes that the citizens pay to the government, that's its national income, and that income is spent on us in order to have good infrastructure, good roads, good schools, good colleges, good hospitals, and even to create job opportunities for us. Now you can understand how brutally black money plays an important role in our economy. The more black money you have, it means more underdeveloped will your country be. For instance, government loses considerable amount of revenue due to large scale tax evasion. As I said, when you have more black money in a present economy, it means a large number of people, a huge group of people evaded their taxes, they did not pay their taxes, and because of that government has to suffer. Now government wouldn't have that amount of money, and when government wouldn't have that amount of money which it should have had, government cannot launch programs, cannot launch schemes and other things for the welfare of us, and government would be unable to pay, to give jobs to the youngsters and all the people who are eligible. So that's demerit number 4. With that we finish the demerits of money. Now if I were to summarize the drawbacks of money, how would I do that? Let's quickly recap the 4 demerits that we have studied. Demerit number 1 said when money lacks the stability of value. When the value of money falls, there will be a problem in the market. When the value of money rises, there will be a problem in the market. So what is suitable? The suitable position for money is to be stable, is to be balanced. In point number 2, we discussed that money can become an instrument to concentrate on having more economic power, and you can become a power monger. In point number 3, we discussed the vital weakness of money, that it degrades the social value system, and because of that we see corruption, irregularities and injustices of all kinds. And lastly, we discussed that when money takes the form of black money, the economy suffers a lot. It means a large number of people, when they evade taxes, the government fails to give us all the things that it should give us. Now we are going to look at what is a bank. We will try to understand the definition of bank and what is the work of different banks. But for now, we will just try to coin the term bank. And what do we mean by banks? We already know what is a bank. A bank is a financial institution that deals in loans. It means banks give its customers loans. That's the primary job of any bank. Other than that, bank collects the savings from the savers, offers these savings and bearing a small part to the borrowers. You see, bank offers saving accounts to the customers. Customers open saving accounts and they start saving in their account. The money that bank gets from all these customers, the bank invests that money with other institutions with imposing highest amount of taxes, or I would say an amount of tax that the bank decides, and from that interest that the bank gets by engaging the money from all the customers of it, it gives a portion of that to us. That's how banks run. You have an account, you constantly save your money. Many people are doing the same thing. So bank would have crores of rupees. Those crores of rupees would be engaged by the bank with the other institutions by imposing certain taxes on them, and when they earn money with the actual amount of money, the interest also comes to the bank. The bank gives you a small amount of interest from that as well. That's how bank run. Now question comes, who are the people that are associated with the bank? You see, farmers are associated with the bank, industrialists are associated with the bank, consumers are associated with the bank, students are associated with the bank, and there are many other sections of people, those who are associated with the bank. They borrow from the bank. Farmers borrow from the bank in order to buy seeds, fertilizers, insecticides and other things. Industrialists borrow from the bank in order to buy machineries and other things in order to get something and start manufacturing that. Consumers like you and I, normal people, also borrow from banks in order to buy a big thing, say a home loan in order to build a house, say some bike loan, car loan in order to buy a bike and a car. And students also take loan in order to pursue their education. If you come from a BPL family, below poverty line family, you would need the bank to give you loans. So these are the people associated with the banks, and they borrow from the bank. Such a business brings profit to the bank. Now all these people borrow from the bank, and bank gives them an amount of interest, and bank utilizes that money with other institutions, and they earn in the form of interest, as I discussed previously. Now those who borrow from the bank have to return the principal to the bank along with the rate of interest. Now you see, if you are an individual who goes on borrowing from the bank, say you borrow 5,000 and the bank imposes say 1,000 rupee tax on that for a tenure of 1 year. So you have to pay the actual amount, that is 5,000, and on top of that you have to pay 1,000 rupees. But it is the opposite with the bank. When you have a saving account with the bank does not give you like a big interest on the savings that you have in comparison to when you take loan from the bank. When you take loan from the bank imposes huge amount of tax on you. But when you have a saving account with the bank does not give you like a huge amount of interest on the savings that you are doing with the bank. So that's the huge difference between what bank does to you and what you are doing to the bank, and in that manner bank earns a lot of money. That's known as profit of the bank. Origin of banking. According to Geoffrey Crowther, the monetary economist, the businessman, the gold merchants and the moneylenders are the ancestors of banks. According to him, he says, in the olden times, in the Middle Ages, we didn't have banks. At that time, the businessmen, the gold merchants and the moneylenders, they worked like the banks. They lent money to the people. Now they did a lot of corruption, that's a different question, but these people worked as banks in the ancient times. That is what Geoffrey Crowther has to say to us. In the Middle Ages, when the Bank of Venice was set up in Italy, the word bank began to gain wide publicity. Now in the Middle Ages, the Bank of Venice was established in Italy, and after that the word bank started to popularize. Question comes, why did they come up with bank in Italy? Because in Italy there were constant warfares among the states, between many states and among the states, and because of that the states constantly needed an account of money and money proper. They needed money to run their different affairs, and there were conflicts and there were wars among these states. So they needed an institution to supply them loans whenever they need with a rate of interest. And for that, to mobilize the resources from one place to another place, they appointed commissioners. Now, who are commissioners? Commissioners are people who are appointed by a commission. In here, commissioner means the people who mobilize the resources from one place to another place. These commissioners came to be known as Monte at that time. But during those times, you need to know that Italy was under the control of German. Not entirely, but a large area of Italy was under the control of Germans. So Germans did not prefer to call them Monte. Germans started calling them Bank in place of Monte. And that's how the word bank came to be. In Italy, this word was banco, and in France it's banchi, and in England it was bank. So that's the evolution of the word bank and the origin of bank. And now you know the different names in the Middle Ages that we have of bank in the different countries. The Bank of Hindustan, that is something you need to coin out if you have a pen or something right now with you. The Bank of Hindustan, the first Bank of India, was set up in 1770. Bank of Hindustan was the first bank we had in India, and that was set up in the year 1770. You should write that down. The first Bank of Assam, it was set up entirely on local capital mobilization. The name of the bank was Guwahati Bank. Now, Guwahati Bank was set up on to mobilize the local the local capital. To mobilize the local capital, Guwahati Bank was established. It was not a central thing, it was just a state thing, and that bank was established in the year 1926. So that's something you should note down as well and keep in your mind too. Now, since we're done with that, we will look at classification or kinds and then functions of different banks. There are different types of banks that we have in the world, and if I ask you, you would know many names of the banks that you see the banner when you go out in our town. At this stage, we will just discuss 6 banks according to your book, but there are other banks, but we will stick with 6 banks. Bank number 1 is Central Bank, then we have Commercial Bank, Regional Rural Bank, Industrial Development Bank of India, Small Industries Development Bank of India, National Bank for Agriculture and Rural Development, also known as NABARD. Besides these banks, there are many other banks. Out of these 6 banks, there are many other banks. Banks like World Bank, banks like Asian Development Bank. So for now, we're not going to discuss about all those banks. We will just stick with these banks. With that, thank you so much for watching. In the next video, I will cover the function of central bank, and if possible, I will also cover the function of commercial bank. So stay tuned for that. Thanks again. Thanks for watching. Hit the like button if you can.